In this next series of videos, we're going to be talking about sales. We've talked before about revenue and various ways that came in, and we've talked about that in the context of a service business. So this is my income statement, and of course the income statement is going to be revenues minus expenses equals net income. And so we've had revenue, and we've had accounts like this is Elvis Impersonator Services. So this would be impersonation fees earned. This is going to be our revenue account, and we might have, I don't know, however much money we made doing impersonation. And then we'll have our expenses, whatever those might be. Of course, we have to have an office, so we're going to have an office. We're going to have rent expense, and we'll just have $35,000, and then we'll make a neat profit on that. Net income, $1,000, and that's how revenue works. And most of the time in our problems, we've just had one line of revenue, nothing else. That's it. In this chapter, we're going to do things a bit differently, because now instead of having just service businesses, we're going to start talking about businesses that sell products, that sell things. This one here, we're going to have Elvis Merchandise Incorporated. Elvis Merchandise. We're going to sell stuff, and this chapter is going to show you how to do the sales part of that. And so that's where we're headed. That's the overall view. Over here I have a number of accounts that we're going to use. We're going to use sales returns and allowances, and then some other things. This is another topic. We'll put this down here. That's other things we're going to talk about. For these, we're going to have these accounts here organized here on my sheet. These are the new accounts that we're going to introduce. We're going to introduce sales returns and allowances, sales and discounts, and sales payable. These are T accounts. And I'm going to show you how to use these as T accounts as we work through a problem. But before we get there, I just wanted to show you how these show up on the income statement. Just observe this now, and we'll get to this eventually. But I just wanted to show you, first of all, where this is going, because I think it'll clarify the stuff that we do in the T accounts. So instead of impersonation fees earned, we're going to have sales. So there's my sales account, $4,500. But also, of course, some people are going to return things. So I'm going to have sales, returns, and allowances. And that's going to be, and we can just put in how much stuff did people bring back. Maybe they brought back $250 worth of stuff. That's how much they returned. And then we had sales discounts. And I'll show you how to use this. This is something where I might have said, I'm going to do this accounts receivable, and then if you pay me early, then you'll get a discount. That's what this sales is for, and we'll talk about that more again when we actually do some problems. But maybe there's $100 in sales discounts, and so this here is going to be sales less these things. And then over here, I'm going to total up these things. I've got 350 sales returns and allowances and sales discounts total, and then I can subtract these two. Minus 350 is 4150. So here's 41. I can just do the math over here as well. That minus that equals 4150. And so here I've got a subtotal on my income statement. So I'm going to put a line. And this is what's called net sales. There's net sales right there. This is sales after sales returns and allowances and sales after discounts as well. There actually should be a thick line there. Do that real quick. If I can get that. Nope, that's not working easy. So there are those. This sales is gross sales. It's all the sales we made regardless of whether we gave anybody a discount if they paid early or whether anybody brought anything back. And so both of these numbers are interesting to someone who's wanting to analyze this financial statement. I might want to look at a company. If I were, say, a bank, I'd want to see, I might want to say, well, y'all have a lot of sales, but then 75% of your material people are returning to you, and that's not good. Are your sales returns and allowances high? And then, of course, what are your net sales as well? What are the sales that you have that people aren't bringing back? And so this way of presenting things puts all of these numbers here on the income statement where they're very clear. So there's an introduction to sales and how they work in an overview. And starting now, we're going to do a problem. I'm going to show you how this works. So stay tuned or log in, watch the next video, and I'll see you there.